So we closed just a hair below the market maker's expected move. We did get a little bit of price action above it, but not very much. Most of the benefit of the cheaper calls to the upside was realized at market open. Very little benefit of it realized throughout the rest of the day. It did move up. Inflation data was hotter on the non-seasonally adjusted basis, but the seasonally adjusted PPI was 0 for headline. I think what was it 0.2 for core. So not a lot of big changes there. Looks like ES is dumping into close a bit, marking a double top just above the long-term trend. This may pull back a little bit into Monday. I'll have to see how much gamma fell off. My sold put expired. Nice. Commodities up 30 points. Looks like precious metals moving again. A little bit of industrial metals. Agricultural commodities. Copper had a nice day. Oil retreated a bit though. So no gains from the energy side of things. 10, 20, 30 still continuing to move up. The 20 years at about 4.45. 10 years over 4%. 210 spreads at about 14 points. Correlation actually didn't do much today. Small move up into the end of the day, but NQ didn't really retreat that much. Barely had any gains on the day. ES did pretty well, but mostly outside of tech, right? So a lot in finance, a little bit in health tech. Producer manufacturing did well. Retail trade did well. This underperformance in tech and overperformance in like the R2K is probably something we're going to have to watch out for next week. If they're predicting a path of faster rate cuts that won't do any damage to inflation, then, they're going to predict like a soft landing, no landing scenario, in which case, bullishness will come back to IWM. So keep an eye on that. Although I do think inflation is still elevated and will probably go up. We may need to see it move higher to get that money to move back into tech. And retail sales will probably be pretty important for IWM next week. Carry trade got levered up, mostly at the top end still. A little bit of a reduction with us finally being past this week's events in the forward yield on vol. However, it is still elevated, but the yield curve uninverted a little bit. So that kind of helped things out a bit. Bond vol kind of falling off a little bit. I know the front end has been down over the last 2 days, back end up, and so the bear steeper is not spiking vol too hard, bond vol too hard, but the big move up in bond vol should still see some kind of reaction from correlation. Skew dropping, usually not a good sign. 3 consecutive days now? Well, trending down. 49.40% of the S&P above its 20-day moving average, and correlation with VIX and cash VIX has moved a little higher. So yeah, it's just kind of walking up a tiny bit. We might see another spike in vol next week as we approach the expiration. Fed fund futures pricing in 95 points of cuts by next June, so almost 100. Really no significant change in this today. There was a drop this morning with the CPI data, or just before the CPI data, and then it just bounced back. Or PPI data. Out here on the long-term trend, that's another week high close, by the way. End of week, all-time high. And this puts us just above the breakout there. We could see a breakout from here continue out to like 5,900. Gamma max will get in the way of that a little bit, so we may not see 5,900 in the short term, but like we might test GM, pull back, and then push for 59, 59.20. Wow, you're right. Luna pumped 9% right at the very end of the day. What the heck? Time for weekend with the Gurks. Nice. Anyway, that's about it. Thank you guys so much for tuning in, and I will see you Sunday? Yeah, yeah, because Monday's markets are open. So I'll see you Sunday at 12:30. Later, guys. Actually, you know what? Yeah. What? Why? 1:30. Who even are you? All right, if there's enough complaints, I'll do 12:30. But right now, tentatively, 1:30. All right, later, guys. Have a good weekend.